Hey, good morning. Welcome to the Mortgage Rate Forecast with Scott Criss. It's the last day of August 2017, and let's look at the charts. So here's where we're at. We're at 103.56 this morning. This is really good, guys. Just breaking above 103.40 was one heck of a feat, to be honest with you. I mean, we were testing this for a long time. So we're in new waters. I wouldn't say it's uncharted waters, but we are definitely in some new water that we haven't seen since almost election, almost November. So bonds are currently trading about 103.40. I'm sorry. Support is coming in at 103.40 and 103.20 just below that. We have resistance at 103.65, which we did touch day before yesterday, and that's when the news of Korea, the launches, all of that has been going on. So that had a negative impact on stocks, but it did help the bonds a little bit. So here's where we're at. The PCE. You're going to look at this and be like, Scott, well, you did that wrong. Is it black or is it green? Well, the PCE came in as expected, but I put a little green in there because this is a sign that the Fed probably will not increase the short-term rate, which is kind of a bond-friendly thing. It just means the economy isn't really doing that great that they're going to increase the short-term rate. So even though it hit expectations, it was a little bit helpful for bonds. PMI, pending home sales, none of those were major market movers. I'm not going to make those red or green. I don't think they helped or hurt bonds. North Korea is definitely helping bonds. But Harvey, which normally when there's something bad for the economy going on, it hurts bonds. I'm sorry, it helps bonds. But Harvey itself, because there's been such an impact on oil in the Gulf, that's almost hurt bonds. So Harvey is kind of like a mixed bag as far as its influence on the bond market. So because you figure when oil prices, when they're not drilling oil prices go up, supply and demand, right? And so if oil prices go up, that creates inflation. And if we have inflation, if it costs more money to transport goods from one area to another area, that's inflationary, and inflation is an enemy of bonds. So I mean, a really just a lot of weird stuff going on right now, guys. Nonetheless, bonds are exceeding expectations. We're currently, last month we were trading at about 102.80. We're currently trading at 103.56, which is 76 cents better. So if Freddie Mac reported, and the source is down below there, Freddie Mac reported that the average consumer was getting a 3.97 interest rate last month, and they were going to be paying about half a point to get that. Now, if we're 76 better, that means the average consumer, if they were getting the same rate, they might get some credits back, like a lender credit of maybe as much as a quarter point. So that's kind of cool. We are seeing the bonds really improve. Now let's get to the forecast. My last projection was a miss, guys, and it was so funny because I was just telling someone, man, I've been hitting on a lot of my reports, but if I'm gonna miss, I would rather be a little conservative. So I was a miss. Bonds beat my expectations by 16 cents. So, but good for bonds, right? Now, as far as the analyst outlook, it's pretty inconsistent on the short term. It's both bullish and neutral. So, but the long term overall, it is pretty neutral. So here's going to be my call. I think the bonds are going to range between about 103.30 to 103.65. I think 103.65 is going to be a tough nut to crack. So, and that's only 9 cents better than where we're at, but we could actually fall down as much as 26 cents in my opinion. So, I think if you like it, lock it. If you want to be safe, we are at what I believe to be close to the top of the trading range. But if you do want to roll those dice, I would say keep your eye on 103.65. That's the next level. And if we can close above that 1, maybe 2 days, that could be a new floor of support for us and really get us into even more new water. So anyway, that's it for now, guys. We would love to hear from you. Leave those comments down below. Hit that like button. Please hit that like button. It doesn't hurt anything. And if you're new to the channel, that guy at the top left, click on him, and that will get you subscribed. So you'll just get a little notification when we release new videos. And at the top right, if none of this made sense to you and you're like, man, I just want a good rate, that's all I want. What's up with all these bonds and charts, and how does it really impact me as a consumer? Click that top right icon. That is Mortgage Bonds 101. It'll teach you the basics you need to know. when you're trying to pick the best time to lock in your interest rate. Okay, guys, that's it for now. Have a great weekend. Have a great 3-day weekend, and we'll be in touch next Thursday, okay? Bye-bye.